And welcome back. One of the nation's largest home builders, which is Lennar, they released their third quarter earnings report last week, and they noted the following: a decrease in home buying traffic, more cancellations compared to the prior year, and also in some cases, reducing their asking prices on their houses. They also identified the US markets that have been most impacted by this housing market slowdown and the measures they're taking right now to not dry up home sales. So in today's video, I'm going to share all the details with you guys so you guys can get some indication of where their housing market's headed and some challenges that home builders are facing right now, and also some opportunities if you're looking to buy a house. And by the way, speaking of buying or selling a house in the US, if you guys want a real estate agent referral in virtually any parts of the United States, then check out that link below, which is homeandmoney.com/Jason. And with that said, let's begin today's video. This is a call transcript for their earnings call, again for Q3 for this year. And by the way, the revenue for the quarter was $8.93 billion, almost a 29% increase on a year-over-year basis. But in today's video, I'm not going to be sharing their financials. I'm actually going to be sharing what their executives had to say regarding what they're seeing right now in our housing market and what they see ahead as well. So first, let's talk about what their executive chairman, who's Stuart Miller, what he had to say. And he said, in addition to the well-documented supply chain constraints and limited workforce slowing production, in other words, they have a limited workforce, which is slowing down their construction of building houses right now. Housing has been considerably impacted by the more than doubling of mortgage rates over the past months, and therefore the doubling of monthly payment costs, in other words, the monthly mortgage payments that home buyers have, and reduction of housing affordability. The housing market has continued to weaken. He's absolutely right that mortgage rates have absolutely skyrocketed. They actually have doubled or almost doubled ever since August 1st of this year. So let me share an example with you guys right now. The average 30-year fixed rate mortgage, according to the Mortgage News Daily, is 6.87%, which is absolutely insane. And by the way, I'm making this video around noon on the 26th of September. So as of today, the average rate is 6.87%, a 17 basis point increase from yesterday, or actually from Friday. And also, as I noted right here, the rate right now is a 14-year high, the highest rates we've seen since 2008, which is absolutely insane. And by the way, average mortgage rates have increased about 182 basis points, or almost 2 percentage points since August 1st of this year. And really quickly, I want to give you guys a real life example of how this is impacting current home buyers right now, and of course, the new home construction industry as well. So the median sold price 1 year ago for new houses in the US, and this is according to the US Census Bureau, 1 year ago was 406,000. Now the median sold price for brand new single-family houses in the US is $439,400. Also, take a look at this, because 1 year ago, average rates or average mortgage rates were at 3.13%. Now they're 6.87%. So let's look at what your housing payment would be 1 year ago versus right now to buy a new single-family home. So again, the median sold price 1 year ago was 406,000. The interest rate or mortgage rate 1 year ago was 3.13%. So your P&I payment would be $1,392 per month. However, though, fast forward to now, when rates are at 6.87%, the median sold price is just under 440,000. Your P&I payment would be $2,308 per month. In other words, that's $916 more per month compared to 1 year ago, or a 66% increase in your average monthly mortgage payment. Now, how insane is that? 1 year ago, your housing payment would be just under $1,400 per month, and now it's $2,300. And of course, the difference here is an increase in home prices, but more importantly, a giant increase in mortgage rates. So when he says here the housing market has continued to weaken, he's absolutely right. We also can see this when looking at the National Association of Realtors for existing home sales. As I reported to you guys a couple of days ago, existing home sales decreased for the 7th consecutive month, and we're still down 19.9% in the number of home sales compared to 1 year ago. And going back to Lennar's transcript here, it says the interest rate movements were very sudden and adjusted very quickly, and that suddenness has always led to a pullback in home buying demand or housing demand. Part of this pullback is driven by simple affordability or lack thereof. And part of the pullback is driven by the psychology of the sudden and aggressive interest rate hike, causing either monthly payment sticker shock or a sense of having missed the boat. This is exactly what CNBC reported last Friday, because they reported that as mortgage rates hit 6.7%, that was Friday, now it's 6.87%, home buyers are facing payment shock. And going back to Lennar's report here, it says with higher mortgage rates, prices must be adjusted downward. Sales are down 12% from last year's levels. And also, along with bringing home prices down, we are laser focused on bringing down production costs as well. We are working with our vast network of trade partners to recognize that the world has changed and we all work together to keep the machine working. Therefore, not only is Lennar bringing down their home prices, but they're asking for their trade partners or their costs in building houses to also come down as well. On top of this, they're being very careful in acquiring new land right now, because they went on to say the following here. They've sharpened their attention on land acquisitions. They're being extremely selective on new land acquisitions and new communities. They have re-reviewed and re-underwritten every land deal in their pipeline, and they are re-underwriting to current market conditions. Capital allocation is being micromanaged. I have some more news to share regarding this here in just a little bit, because they're being very careful in purchasing new land right now, given the fact that our housing market is slowing down greatly due to spiking mortgage rates. And next, he touches on inventory. So according to Lennar here, inventory levels are up 20% year over year for their company, and this increase is mostly a function of growth, supply chain dysfunction, and expanded cycle time. One thing I would add regarding this is the increase of inventory is also due to a pullback in home buying demand. And of course, I support my claims with data. So according to the US Census Bureau, the most recent report we have, which is the July 2022, we saw a 29.6% decrease in the number of contracts being signed between home builders and home buyers compared to 1 year ago. Next, Rick Beckwith had this to say. He's the co-CEO and also the co-president of Lennar. In our more challenging areas, we've had to adjust prices and increase incentives to regain sales momentum. During the third quarter, our new sales orders declined by 12% from the prior year, and also their cancellation rate and sales incentives picked up during the quarter as well. And speaking of cancellation rates, their third quarter cancellation rate was 21%, which is slightly above the historical averages. Now, here's something I found to be very interesting that you guys should be aware of. It says, I'd like to give you an update on our markets across the country. And they basically fall into three main categories, category 1, 2, and 3. So category 1, markets have continued to perform well. Category number 2, markets where they have adjusted pricing and incentives, and also in category 3, markets that may require some additional pricing adjustments. And here are their category 1 markets that are performing well. They have 9 markets that are in category 1. Those would be Southwest Florida, Southeast Florida, Palm Atlantic, New Jersey, Maryland, Virginia, Charlotte, North Carolina, Indianapolis, and also San Diego. Now keep this in mind, these are their top performing markets in their entire United States. They're category 1 markets that are performing well. But despite that, they had to offer mortgage buy-down programs, in other words, buying down home buyers' mortgage rates, and also normalize incentives to maintain sales momentum. Some communities in these markets have required targeted price adjustments as well. Isn't that mind-blowing? Their top markets, they still are offering to buy down their interest rates and also offering incentives for home buyers. And on top of that, they're also reducing their asking prices of their houses as well. To me, this is pretty eye-opening because their best performing markets, they're still offering incentives for home buyers and also in some cases, reducing their prices for their houses as well. So that's category 1. Let's have a look at category 2 markets according to Lennar here. And these are made up of 22 markets listed below right here. I won't list every single market here, but they do include Phoenix, Las Vegas, as well as Sacramento. In these markets, buyer traffic has slowed down, and they're also seeing a pickup in cancellations. In other words, home buyers canceling out of buying houses right now. They've also had to offer more aggressive financing programs and also price reductions and or increased incentives for home buyers. And the size of these adjustments here is based on a community by community basis. But check this out because it says in some cases to avoid cancellations from home buyers, we have adjusted pricing on our homes in backlog. This is pretty eye-opening here because they're saying here that in order to avoid cancellations for home buyers, they are in some cases reducing their prices of their houses even though they're already in a contract with a home buyer. This is pretty eye-opening because normally home prices are set in stone once the offer is accepted from the home builder. But they're saying here in order to avoid cancellations, they are reducing their prices of their houses in some cases. So my biggest takeaway for you guys, whether you're in contract for a brand new home for Lennar or any other builder for that matter, you may be able to renegotiate the price of your house given the fact that our housing market has slowed down so much in such a short period of time. But keep in mind, these are Category 2 markets and not the worst of their markets here. And speaking of that, let's look at their Category 3 markets, which reflect more significant market softening and correction. And these include the Philly metro area, Minnesota, Pensacola, Austin, Texas, Reno, Nevada, Boise, Idaho, as well as Utah. In these markets, traffic has slowed significantly, buyers are taking more time to make a purchase decision, and many need to be convinced that now is the time to buy. What a joke. On top of that, they're seeing an elevated level of cancellations from home buyers as well. And this has required us to work in many cases with our backlog or homes under contract with a home buyer to prevent cancellations. It also has required a mix of significant base price adjustments, in other words, a significant decrease in home prices, sales incentives, and aggressive mortgage buy down. Therefore, in order to mitigate cancellations in these markets here, they're reducing their asking prices, giving more sales incentives for home buyers, and also offering more aggressive mortgage buy downs. And what this means right here is that the builder is paying points in order to decrease the buyer's mortgage rate. And again, if you're a home buyer looking to buy a house in these markets here, or you're currently in contract to buy a house in these markets here, whether it's Lennar or any other builder, you may want to renegotiate your contract. Lennar also provides some really interesting insights regarding land purchases for the quarter. It says most of the land deals or most land acquisitions that they closed in the third quarter came from their strong land relationships. These are deals where they would be starting construction very, very quickly and still projecting healthy gross margins. And here's a key statement here. It says all other land deals based on the updated underwriting either had its timing delayed, was restructured, or we did not proceed. So in other words, they're only moving forward with land acquisitions right now if they can build houses very quickly and also have projected healthy growth margins. Otherwise, if they can't accomplish this, they're delaying their purchases for land right now, or restructuring their contracts or canceling out altogether. It just goes to show how Lennar is being very careful in purchasing new land right now, given the fact that our housing market has shifted greatly over the past several months. They also touch on lumber costs as well, which is really interesting to see this. It says, as expected, costs increased in our third quarter as increases from lumber that spiked in Q1 flowed through to our third quarter closings. As a reminder, the drop in lumber prices that we saw earlier this year benefited the cost of our starts in the third quarter and will flow through deliveries in the first half of 2023. And speaking of that, I want to give you guys an update regarding lumber futures prices. So lumber future prices right now, look at this, $413. I remember about a couple of years ago, prices were almost $1,700, which is absolutely insane. And also year to date, prices are down 62% right now compared to 1 year ago. Prices are down by 32%. And also at current levels at $413 right now is very close to pre-COVID levels of around $400. And lastly, Lennar ended the quarter with $1.3 billion in cash and no borrowings against their $2.6 billion revolving credit facility. In other words, their loans they have available to them, they haven't even used because they have $1.3 billion in cash. And this is a total of $3.9 billion of home building liquidity. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value of this video whatsoever, then please hit the like button. I really appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.